What is going on, guys? My name is Alex, and this is the Equity Odyssey podcast. And today I have the pleasure of interviewing Tiffany Lundt. And Tiffany is a total pro when it comes to syndicating multifamily deals, and she is the director of syndication at Friedman Lundt. So, Tiffany, super excited to take a deep dive into all your knowledge and expertise today.
Awesome. Thank you so much. I appreciate you inviting me on this podcast, Alex, and really excited to speak to all of you about and share a little bit more about multifamily syndication. Just a little background on myself. My name is Tiffany Lundt, Director of Syndication at Freeman Lundt, where we focus on multifamily investments that create strong returns for investors while improving our communities. In simple terms, multifamily syndication means we partner with investors to buy large apartment buildings, usually anywhere between 30 to 150 units, that an individual investor may not be able to afford alone. This approach allows our investors to access to larger projects, benefit from scalability, and build wealth through real estate. I come from a background in commercial lending with nearly 2 decades of experience in lending and underwriting, which gives me a unique edge in identifying and structuring great deals. While I specialize in capital raising and investor relations, I also collaborate with other seasoned operators and sponsors to bring high quality investment opportunities to the table.
Awesome. That sounds awesome. So, you started the first thing you did in real estate was kind of commercial lending. Am I understanding that correctly?
That's correct. Yes.
Awesome.
That,
Tell,
that go ahead. Sorry.
I was gonna say, tell me a little bit about the commercial lending experience that you had.
Yeah, I have been in banking pretty much all my life in the last 2 decades, right? And that had afforded me lots of experience in the risk mitigating world and underwriting and exposure to just really collaborating with owner operators, right? And providing them the financing they need in order to scale their business. And so that actually was really the tip of the iceberg of like how the catalyst really of how it got me to be interested in real estate because as we know, all of the wealthy people usually have a way in some type of investing in real estate. And so personally, I wanted to reflect on that and see how I can personally build wealth for myself and for my family and for the generations to come. And that's how it opened up the doors for my keen interest in syndication and multifamily specifically.
Awesome. Tell me about the jump. Like at some point, you're in the commercial lending space, and then eventually you actually get into the syndication space. I would be curious to know about that transition, like how it happened, what sparked it, and what made you want to
Yeah, of
make
course.
the jump.
So interestingly, like, for me, for my family, we were looking through ways of being able to scale our portfolio, and we were looking for ways for minimizing our tax burden as well. And so through exploration of that, I came across multifamily syndication because like most people, we always think that the only way to scale or the only way to build wealth through real estate is through your typical investment in single family residence, the duplexes and things like that, smaller projects because it's within your means. It's within our capital that we're able to invest. And when I came across the idea of multifamily syndication, which is a very well kept secret in the industry, where you can scale. You don't have to be completely wealthy to be able to invest in these larger projects because you're leveraging other people's money to be able to invest in larger deals. And so when I was in banking, I did not know that. But when I came across through my exploration of how to scale for my own family's portfolio, that's where I realized, wow, this is something that I need to really devote my whole life to basically, right? Because at this point, it's like it's a very well kept secret. And so leaving behind my lucrative six-figure salary in banking was both liberating and terrifying. I walked from basically a stable career and an established reputation with a strong professional network, and to just really jump in with both feet. Because that's how much I believed in this process and then this opportunity. There were moments of doubt, of course, second thoughts, and even imposter syndrome. But as I witnessed the profound impact, not just for myself and my family, but also for others looking to break free from the 9 to 5 grind, I knew I had found my purpose. The ability to spend more time with my children while helping others create financial freedom reaffirmed that, this is the right path for me.
Hmm.
Though it was challenging, it remains one of the most rewarding decisions I've ever made, aligning my career with my greater vision for the future.
Awesome, awesome. So just like you're kind of grinding in the commercial lending space and wasn't getting to spend enough time with your family. And um, something else also like to ask, I'm curious about is was multifamily syndication like a larger opportunity vehicle than the one you're in, or is it just something different that fit your lifestyle better, or was that a factor at all?
It is definitely both, right? So part of being in like lending and banking in general in the corporate world, you have to navigate a lot in the corporate bureaucracies. And what I found it that while I was able to help my clients finance their dreams, I I had to navigate a lot of the bureaucracies, which I could not properly advocate for my clients in the manner that I'd like. And it's because we're confined in this credit box, right? And what we can or cannot do to advocate for our clients. And so part of that was my frustration to, okay, if I want to really be a true advocate for those that I want to help and the clients that I serve, I need to be able to have a certain level of freedom and avoid all the red tape or avoid all the bureaucracies. And that was probably one of the reasons, the biggest driver as to why I decided, you know what, in order to do that, I need to break free from the corporate bureaucracies and take on really, the self-employment route, right? Where
Mhm.
I have more autonomy and flexibility on how I want to run my business to better serve my clients. And
Right.
so that's exactly why I feel like this is something that I really need to invest time in because my background, I started, I grew up in Section 8 housing, so experienced firsthand what it's like to live in underfunded and mismanaged properties. Um, and it just humble beginnings, right? And it's that classic rich dad, poor dad scenario where you have your parents who are immigrants, myself, right? And they do what they could best do to help provide food and shelter, but they don't know how to build wealth, right? They come here with the idea or the notion of pursuing the American dream, but they cannot really know how to break that glass ceiling. And so, because of that, a lot of that I have to discover on my own and through the generosity of other mentors and relationships that I've had that had helped guide me towards understanding how to build wealth and break away from that generational social caste system, right? And that's where again it's this early experience had shaped my passion for creating better living environments and housing opportunities. So even though I've been in the lending industry, what I've realized is that multifamily investing and syndicating is going to be able to afford me the ability to not only scale personally my wealth and for my family, but also to give me an opportunity to give back to the community by improving housing, right?
Hmm.
The environment that they're in. And just because we're the owners of this massive multifamily property does not mean that we do it where we're slumlords, right? We want to be mindful about the living conditions. And so to the core, it really goes back to growing up, having experience and understanding firsthand how that feels to not live in a properly managed unit. I realized, you know what, families deserve better than that. And so there's no better way for me to achieve both of that goal than through multifamily.
Right. It just aligns really well with what you're trying to accomplish. That's cool. Awesome. Tell me about the first deal that you did in the multifamily space. Were you like a an active partner, or a passive, or tell me what that looked like?
So a lot of my opportunities right now have been through collaboration in the investor relations aspect of multifamily syndication. So the interesting part about multifamily in itself is with, it's a team sport. You collaborate with folks to whether they are more on the GP side, the general partner side, where they're actively managing. But then you know what? You find a property, and then now you need to raise money not only for the down payment for the acquisition, but you also have to raise for the capital expenditures too, right?
Hmm.
For to anticipate any renovations you need to do. So for me, it was more of collaborating with other operators and sponsors and deals. And that was where and personally for the LP side, which is the limited partners. So I get my hands kind of involved in both ends of the spectrum, so to speak, that help scale our business.
Mm, makes sense. Gotcha. How do you go about finding those other, credible, trustworthy individuals to partner up with and to do deals with?
So I am part of a large network of 4,500 members that are specifically dedicating their lives into the multifamily syndication realm, and so we a lot of times collaborate and uh, talk to whether it's sponsors or other folks that are their superpower is in underwriting, or is it through acquisition, or they are also investor relations where they help capital raise. So there's a lot of like mixing and realignment of different teammates, so to speak, to bring forth fruition of a project. And so we, with that, that's where dynamically you won't really see like one group or general partners of like the same people all the time, but you'll see a mixture of them depending on project base and what markets they are interested in and what their investor pool is interested in.
Gotcha. So do you have this basically this network or group that you're a part of, and like you said, everyone kind of has a little different specialty. Somebody's good at operating deals, finding deals, raising capital, investor relations, stuff like that. And you mentioned your specialty is more on the investor relations, raising capital side. Is that right?
That's correct. And, I guess just naturally, I mean, with my background from having been in banking for so long, naturally, because back then I was, working with CEOs and CFOs of their companies, like executive level clients that in their enterprise value is anywhere between $5 to $50 million in revenue, right? And so what we so naturally because of that, these are high net worth clients, and they have relationships with private banking and things like that too. So for me, with that background, I have access to a larger network of high and ultra net worth clients simply because of my relationship in banking.
Gotcha. Yeah, that's huge, right? Your network is your net worth is a common thing people
Like,
say for sure. In like, let's say you meet somebody, they have a great deal, you guys partner up, and you're planning on raising the capital. Is that the first place you go? Is just you go to your network? Or is there another tactic you like to use as well?
typically, we're always, and if you talk to any syndicator, your role as an investor relations and capital raising, you're always capital raising, and not just one person. Just because I am specialized in the investor relations side doesn't mean that other folks on our team are not also constantly in raising capital. And what I mean by that is that in everyday conversation, in every connections that you do, in every meeting that you go to or networking, you want to be mindful about making that an opportunity to understand the person that you're talking to and how that could be an opportunity for you to raise money from them, right? Because every single person is a potential investor, whether they realize it or not, or they have the means for it or not. It's about understanding what their life's goal is, right? And so for me, I'm always constantly raising through my conversations and connections so that when the day comes, our when there's a opportunity that comes to the table, we would then already have an arsenal of our investors that are particularly interested and are already on board with our investment strategy. So that's where it will be easier for us to pull the trigger when we say, here's a great deal that, and here's why, right? And we give them all the parameters. And at that point, our investors already would have understood what our buy box is and how we safeguard their funds if we were to invest here. And here's the targeted returns that we anticipate this would generate. And so we would go through that presentation with them so that they understand where we're going to deploy their funds. And so it's again, constantly always raising money, right? We're always constantly building on our investors' relationship so that when there's an opportunity that comes on the table, we already have vested in, investors.
Right. Awesome. And mostly networking, or do you do any other thing? Like maybe we mentioned podcasting. Some people run ads, like depending on your deal structures and things like that. But is it mostly networking or any other tactics for building new relationships?
Yeah, it is both. Like very so being a syndicator, it's very multifaceted of what you have to do. You have to wear a lot of different hats, right? And part of networking is you're going to attend programs or real estate investors meetups and things like that to help spread the word about what multifamily syndication is or multifamily investing. And so that's one facet of this role. But the other is more of providing education, right? That's huge. And so what I do now is I actually lead a group of people where we have, I call it Tea Time with Tiffany and Ellie, which is my counterpart partner in this, networking group that we host each Sunday. We would share, okay, what does it mean to be a syndicator? We break down and demystify what that means and what are some strategies on how to capital raise and how to stay compliant with the SEC, right? We have to be very careful the way that we market and how we raise funds because depending on the offering, it's a fine line that you cross from staying compliant and going to jail.
Yeah.
So it's very important that we help educate the general public, but also those who are actually out there trying to learn the ropes of being a syndicator. And so from those type of initiatives, I'm able to build strong relationships, whether it are the students or that it's potential investors. They all see it as more, wow, you just provide me with such invaluable knowledge and education in this space that I wouldn't otherwise received, right? And so from that, that's where we get a lot of traction on people who are interested in investing and or they want to partner up or so things of that sort. It's really, again, visibility is important. And so the other thing that we are trying to implement that's actually later on this month, we are going to be hosting our first webinar to really demystify what multifamily investing is and the benefits that it brings.
Awesome. So just out there providing value.
Yes,
Yeah.
yes.
Awesome. Well, very cool. Looking back on all your experiences and things like that up until this point, is there things that you'd point out and be like, that was a mistake. That was a lesson learned. Anything like that that comes to mind?
Oh, absolutely. And I still feel like sometimes I'm still experiencing that,
Oh
right?
yeah, totally. It doesn't stop.
And it's always going through this process has been an eye-opening opening for one. And two, it's more of you're always constantly improving and reflecting on what you could do differently and better, right? And so early on, I focused on too much on deal quantity over deal quality,
Mm,
right? When I started, I was more so of like, gosh, I just want a deal. I just want a deal. And you quickly realize that it's better to say no to a deal that doesn't meet your criteria than to force a deal that doesn't align with your objectives. And that's why we're so like stringent on here is my buy box. Here is my focus in my market. And so that way you don't get distracted the moment you see the next shiny object, right? And that was what a lot of syndicators or new syndicators are doing, is that they're kind of hodgepodge things together, and then they jump from one MSA to the next MSA, and it was like, okay, well, now you're spreading yourself too thin. And then because you're getting too desperate, you may end up trying to force a deal to happen or to pencil out. And then now you let's say you acquire that building, and because you forced it to happen, instead of realizing, hey, you stick within your parameters and your underwriting metrics, you end up risking your investors' money. Because now, I mean, even when you think about it, between now and 2026, there's a lot of loans that are maturing. About $1.8 trillion are maturing. And a lot of that is going to become either insolvent, or that they're not going to be able to renew, or the most of the people can't debt service anymore, because what, 5 years ago, 2020, that's when the interest rates are like 2-3%. Now you're renewing it at like the high sixes. That's doubled what they were used to paying. So that's why a lot of these guys are struggling to renew and be able to debt service. And so with that in mind, there's going to be opportunities where, as syndicators today, you have an opportunity to capitalize on that, right? Where you'll see a lot of properties going into distress or not being able to make their payments, and or lenders are becoming insolvent. And so now they have to sell it at a very big discount. And so again, to avoid from being able to being in that position, you always have to be very strategic, systematic, and disciplined in the way that you look at a deal, and understand that this is a marathon and not a sprint.
Totally. Made that mistake probably on much smaller scales, but yeah, it's just you can look at deals and you're just so excited to do more deals that you can kind of like fudge the numbers a little bit. Um, when you are looking at deals and trying to help avoid that mistake or help others avoid that, what are some of the quick like underwriting like highlight points that you just check on your first pass? What are some of the things you like to look at?
So we do what kind of like a litmus test of like a quick and dirty underwriting,
Hmm.
right? And so typically what you do is you whatever the reported NOI or that they had, oftentimes when you look at an offering memorandum or the T12, you would see that here's the reported NOI. Um, and it's easy to kind of work backwards based on that, because if you can understand what the market, because the market cap rate here in Seattle is like in the, in the five, sometimes even 4.5, but it's different than when you're in, say, Omaha, right? Omaha is in the 7% in market rate. So that the difference in that is that the value of the property that they're selling, you have to weigh out, okay, what is it truly generating in NOI versus what the seller is trying to sell it at, and does it make sense? And so when you do that, you have to evaluate day one, does this property cash flow, and can it debt service at least a 1.25 debt service coverage ratio? And what that means is for every dollar of debt, you have to be able to generate at least $1.25 to service that debt. And that's what a lot of the lenders' criteria are. And if you can say day one, I can cash flow and debt service based on the existing NOI, then it might be, and that's the litmus test, right? Don't ever go into speculatively saying, oh, you know what, it's just right under that, but I can turn it around and raise the market rent and do all these renovations and charge them these extra fees, like, and then now I can bring it up to market value and service my debt. That's not how it works, and that's why a lot of new syndicators um, risk having to go back and do a capital call,
Hmm.
right? For our investors. And that's the worst thing you can possibly do as a syndicator, is to go back to the investors and say, I need to ask you for more money in order to float this deal, right? And that again, your credibility goes out the window, and your reputation as um, a carefully vetted syndicator is so important. The moment you tarnish that and you're known to be the, hey, pie in the sky person, and then you lost people's money, that's it. You're out.
Hmm.
No one's going to trust you. And there's just so many syndicators out there, right? So you have to be very careful when it comes to underwriting and being mindful that you're sticking to your strict underwriting standards
Hmm.
to avoid that from happening.
That's a pro tip, everybody. That's good stuff. Awesome, awesome. Yeah, really good advice. So fast forwarding to today, what are your day-to-day activities? Is it, raising capital, networking, or what's the day-to-day look like for you right now?
My day is a mix of strategic networking, underwriting deals like no tomorrow, and investor relations, right? I spend a lot of time reviewing deals that align with our investment criteria, collaborating with sponsors, and educating investors on syndication opportunities. Because at the end of the day, real estate is such a relationship-driven business. So I also focus on building connections with brokers, lenders, and other key players, right? I mentioned to you earlier, this is a very multifaceted role. You're constantly wearing different hats. It's just not about raising money for a deal. You want to get the off-market deals, the pocket listings, right? Before they hit the market, because that's where you have more leverage in negotiation for the price of the building. And that's where broker relations are so important. You build a great relationship with these commercial real estate brokers so that as soon as they know that they're going to have a property go on market soon, but they give you a heads up, hey, Tiffany, this is an opportunity here in your market and it meets your criteria. What are your thoughts? And that gives us the opportunity to submit our LOI before everybody else. And that gives us an advantage. And so that's important, again, to build those relationships. And like,
Mhm.
for instance, lenders, right? We need to understand what their lending criteria so that when we do our underwriting, we know that we can actually get this loan approved. So there's just a lot of varying aspects in this role that you have to be mindful about. And so my day to day really is about how do I build my network, how I'm constantly, connecting with others in the industries and funny thing is, most people think, oh, you don't want to network with people that are doing the same thing you're doing. It's like, competition. The worst thing you can think is that there is anybody is competition because at the end of the day, everybody has different buy boxes, right? Just because they're syndicators, well, does not mean that they're going to directly compete with what I'm doing because my investment criteria and what I'm looking for my investors may be different than what they're looking for. And so if they come across an opportunity that doesn't quite fit theirs, then guess what? They're going to call me and say, Tiffany, it looks like this is going to be something that fits your buy box. What are your thoughts? And so it's a very two-way street relationship. And so that's what I do when I thrive in, even in my previous role as a lender. It's all about networking and then expanding your reach, right?
Awesome, awesome. And what specific deals are you guys looking forward to doing? Do you guys have a really clearly defined buy box that you like to stick to?
Yeah, absolutely. So we specialize in value add multifamily properties, particularly in the B and C class asset, in strong emerging markets. These properties allow us to implement operational efficiencies and physical improvements that ultimately drive the bottom line, the NOI and the appreciation of the property, so that our investors will get their nice paycheck at the on the back end when we liquidate it, right? Um, our strategy is really it goes down to data driven. We do a lot of market research, making sure that it meets our investment criteria, like key indicators of population growth, wage growth, rent growth, things like that. We always do our due diligence before we make an investment. And we target like markets that are like, for instance, right now, our focus is in like Omaha, Tulsa, and the outskirts of Dallas,
Mm.
markets with strong fundamentals of job growth and population increase. And we like buildings that are 1980s or newer, located just right outside of the suburban areas, right? And we target properties between 30 to 150 units. And our targeted IRR is between 16 to 20% with a 7 to 9% cash on cash returns for
Mm.
our investor.
Awesome. So you guys have that dialed in. You very clear.
Absolutely. We
Yeah.
have to be
Yes.
because if you're not disciplined and you don't have a guideline of how do you know what is a good deal or not, right?
Hmm.
And if you just going out there chasing the next shiny thing and only because, oh, this is a great NOI, but how do you know comparatively is this a
Right.
good NOI, right?
Right.
So
Yeah, totally. No, there's a lot of value in that. Just getting good at one thing and just focusing, right? Not trying to chase 100 different things. So that's awesome. What does the future hold for you guys? More of the same, or is there something cool in the future? Or tell me about that.
yeah, our current focus right now is on expanding our investors base and sourcing more high quality deals in our target markets. Freeman Lunt is it's a multifaceted firm. We offer expertise not just in multifamily syndication, but we are also a mergers and acquisitions firm, and we have a division in commercial capital advisory, which helps people find the financing they need. Um, and we also help business owners navigate liquidity events, right? Because when we help them sell their businesses, that's a liquidity event and that's a capital event too,
Mhm.
right? Like you now are going to be taxed on this. And so what we help is to reinvest their capital strategically. And so we also have a sister company, a manufacturing company called LED Trail. And what it does is that we retrofit our properties with energy efficient LED lighting and EV charging stations, which enhances sustainability while adding to the bottom line. Like for instance, in the state of Washington right now, they actually have implemented a um, where by 2026, all the multifamily properties, existing ones, need to allocate at least 5% of their parking lots for EV chargers. And for new builds, well, you need to allocate at least 10%. And so there are government grants out there that people can capitalize on where they get essentially their EV chargers installation completely free. But people don't know that,
Mhm.
right? Because the government is trying to incentivize folks to be first movers, right? And so part of Freeman Lunch, we're just so multifaceted. We want to make sure that we help clients from cradle to the grave of building wealth, whether it's they've just started their business, right? And then they need financing for it, which we help find the lenders for them. And then if they and for the ongoing operations, we help them strategically and invest and build wealth passively while they're operating their business. And then when they're ready to exit that, we help them with the retirement plan so that they can stay retired. And that's where multifamily syndication is just part of one of the solutions, the many solutions that we offer for them to build wealth and also be able to take advantage of tax liability that they will end up getting, whether it's through their liquidity event or that it's through their own traditional stocks and bonds capital gains that they get. We are able to help them come up with a strategy to minimize that and ultimately help them create efficiencies financially.
Awesome. Awesome. As we're rounding out here, what would you say your biggest failure is? And failure in like positive sense, but setback maybe would be a better term.
I would say that the biggest lesson I learned was that wealth is not just about working hard. I mean, coming from an Asian background, right? A lot of us are based on meritocracy. That's what we were taught. Bow your heads, work hard, and the upper management will recognize your hard work and treat you accordingly. And that's really the core of our culture as a minority. And unfortunately, with that mindset, it's harder to scale wealth and it's harder to break the glass ceiling, right? And so I've learned that it is not about working hard. It's about how you position your capital and being smart about it, right? While you're working your W-2, how are you, the money, the savings that you have, the 401k you have, things like that, how are you going to have that money work harder for you? And so when I was watching successful investors during my banking career, I saw that those who built long-term wealth did so through assets like real estate, right? And that realization really pushed me to make the leap into multifamily investing, like I mentioned earlier. Then as I got into it, I just realized it's even more so relationship driven. And so my mistake I made was in the beginning of my career, I was very much about that work hard, meritocracy, things like that. And I was not really being my own advocate and building wealth and being able to scale. So in hindsight, I wish I'd known this earlier, that there are folks out there that's tried and true, already done this, they already paved the way. I just needed to understand and have that piece of education. And that's part of why, again, I'm so passionate about what I do now, is because I know, I mean, if you ask a lot of people now, do they know what multifamily syndication is? I would venture to say probably 70 to 80% of the folks that you talk to, they will say, what the heck is that? Right. And that's the reality. Most people, the general public do not know. And so that's where I'm so invested in the educational piece and spreading the word about how this can dynamically change their life and their generations to come.
Awesome. Well, Tiffany Lundt, ladies and gentlemen, where can people find out more about you?
Well, you can hit me up in, LinkedIn, Instagram, and my website, freemanlunt.com, where we also offer investor educational calls. Like I mentioned to you, we'll be doing a monthly webinar to really educate potential real estate investors, whether they're new or seasoned. It doesn't matter. If they come, then we would help show them the way of how to real and demystify overall what multifamily investing is, right? And we typically would have guest speakers and things like that too to help provide valuable insight for the multifamily investing industry in general. And so you can find me on LinkedIn, Instagram, or my website.
Awesome. We'll drop those links in the description. But other than that, it was a pleasure having you on, and look forward to getting to talk again.
Thank you so much, Alex. I appreciate the opportunity.